Hello there. Today I want to talk about how the recession is going to affect you, but more importantly, how it's going to affect you and the real estate market as it impacts you. And the answer is, it really won't. If anything, it might help a little bit. What do I mean by that? Well, first of all, we have to understand what a recession is. A recession is simply the opposite of growth or expansion. So the moment that the economy is no longer growing, it's receding. Just like the ocean when the surf comes up. It's either coming in or going out. It's never standing still. So what you need to understand first and foremost about the media and the hype that surrounds the media is simply that when they're talking about a recession, it's because they don't have anything else to talk about, and factually they're being correct. But a recession does not necessarily mean that the real estate market is going to tank, nor does it necessarily mean that the real estate market values are in concert with what's happening in the overall economy. The other thing I'd like to point out is that our economy, speaking of the United States, is very, very large. It's huge. And it takes massive, massive changes in all of the markets to have massive changes in something like the real estate markets. Now, when you look at real estate as a whole, you have to understand that there are incredible differences within the pockets within real estate. And when it comes to finding a home for yourself, well, you're only looking for one house. And the next thing that I might remind you of is you're probably not looking at it the same way that an investor is looking at a stock. Yes, your home is the greatest investment that you can make, but it's also the slowest moving investment in most cases that you can make. It can have the greatest returns, but oftentimes they take place over time, and in some cases, large periods of time. Now, over the last 10 years, over the last 20 years, we've seen times within various real estate markets where real estate values have just gone through the roof in a very short period of time. But that's not a normal thing. And so what you have to understand is that when you're buying a home for yourself, you just need to think about all the different factors that are going to go into your purchase. What's happening with you and your family, specifically over the long term. My first question to ask you would be, when do you plan to move again after you buy your next property? Well, many people look at their next home purchase as the last home they're ever going to buy. Many of my clients go into the process trying to find the perfect home under some wild assumption that they're going to live in this home for almost the rest of their lives, or a large percentage of it, which is not usually the case. As a matter of fact, if you wanted to look at some raw statistics and some raw data, if I'm not mistaken, it says that the average American moves every 2 to 3 years, which means that while many people do stay in their home for a period of decades, many don't. But at the same time, I'm having a conversation with you today about the current recession and the current market and how it might affect you today. And the reality is that it really doesn't. You need to buy a home when it's right for you to buy a home, when you can afford it. If the interest rates are higher at that point in time, then the interest rates are higher. I'd like to thank the U.S. military for their sponsoring of this video with their helicopter sounds. But getting back to my point, when you're looking at a home and you're looking at the real estate market and you're looking at the economy and you're looking at a recession and you're concerned about the values, the main thing you need to consider is how long you're going to be living in that home. If you're buying a home for a new family and you plan on raising your children in this home and they're going to be staying for a very long time, what I can promise you is, over the course of history, the real estate curve is a 45-degree angle going up. And because of that, what that means is that if you live in your home for a period of time, it, in most cases, almost always goes up in value, with very few exceptions throughout the United States. So getting back to what is best for you, as with every real estate purchase, you need to focus on location, location, location. And that's where a lot of these economic forces are at play. If you purchase a home in a less desirable location or a location with a lot of inventory, the chances are that over time, your real estate investment will not increase as much as if you buy a home in a hot area that has a lot of transactions happening and a lot of people constantly moving, and the demand for the properties in that area is very high. Now, I live and work in Los Angeles, so our market is very unique in the sense that we are one of the largest markets in the United States, but in addition to that, we also have almost no available new land to build on, and therefore there's no new inventory coming of new homes construction. Any new home construction is usually coming from the replacement of old buildings that existed. So something that I saw that was very interesting in the news, as a matter of fact, last night, was they were comparing the prices of the current Halloween places that you can go for Halloween. Knott's Berry Farm, Disneyland, and some of the smaller ones. And they were looking at the prices in the past versus the prices today, and noting that the prices in many cases have gone up 10-20% across the board at most of these places as inflation has increased and the prices for everything in our country has increased. Well, how does that impact the real estate market? Well, the most telling statistic that they shared during their presentation was the fact that Americans have more expendable income right now, or income saved, than they've ever had. Or it's at almost the highest rate that it's ever been, with 2021 being the highest rate. Some of the reasons for that being that most people were at home for the last several years due to COVID restrictions and other things. Travel has been greatly restricted, and most people have been saving a lot of money. So as a result, even though inflation is hitting with higher prices, the demand and the number of people visiting these parks is as high as it's ever been. People have the money and they're willing to spend it. And I would say that that same notion would also go for home markets, especially in prime areas that are very desirable. In, once again, Los Angeles, for instance, and in Long Beach, and in the South Bay Beach cities, and in the West Side, and in the prime areas of Orange County, our inventory levels are still at historic lows, meaning there just aren't that many homes for sale. And the total number of homes that are transacting in a given month is at a very, very low rate. So as a result, even as inventory begins to increase, with some people making adjustments and moving to different places and buying less expensive homes, if you will, there's still very few homes to choose from. So the demand for those homes is very high, and as a result, over time, the values stay not only stable, but in many areas are continuing to increase. So those are some of the things that I'd like to kind of put out there into the conversation, if you will, and have you give some thought to as you hear the media hype recession, recession, and everything is more expensive. Well, it is, but the people can afford it, and they have the money saved to afford it. And if they're prioritizing their home and their home purchase, then they're willing to spend on their home and their home purchase. And the other thing I'd also like to remind everyone, once again, is that the mortgages that people had to acquire in order to purchase a new home recently, or at least over the last 5 to 10 years, required a minimum of 10% down, but in many cases 20% down, with the exception of FHA loans. I'm speaking specifically of more traditional purchases, specifically jumbo purchases in prime areas. But because of that, many people have a lot of equity in their more recent purchases, and anybody who owned their home prior to that has as much equity or more because the values have gone up steadily during that time. So those are some of the different things that I think are important to consider when you're considering buying a home for yourself. Would be how long you're going to stay in it, because if you're going to be in your home for 5 to 10 years, in most cases, the current economy and the current recession and all the other things that you're hearing that you believe might be negative things in the market will most likely change, and maybe change a couple times before the next time that you decide to move. Now, if you'd like more information, or if you'd like to speak with me directly, please send me a direct message through Instagram if this is where you're seeing this video, or through YouTube. You can email me directly at homesbythebeach@gmail.com. You can check out my website at hoffhomesla.com. And as always, I appreciate everyone who watches and supports these videos. Watching them to the end is very helpful. Liking them and subscribing is the best way to support me as well. And thank you very much. Until next time, and good luck.